Okay, let me take Mr. Goddy now.
Yes.
Okay. Well, my question is this: what's the difference between managing trade and risk management?
Okay. Managing a trade is what me and Celia just spoke about now. You manage a trade when you like, let's say you open a position now here. You sold here when the price got here. You had a trading plan. You had key levels first. You start with the key levels, all right? You've identified your key levels. You have a plan. And now you know that, okay, when price gets to 1929.0, when price gets to this area here, you're looking to sell. You have a plan. So now you draw now your ideas based on these trading setups here. So now when you sell this trade, you open a position like this using the parameters that I sent because I trade 1:2 on average. So now you have something like this going on. Then the price activates your order and starts running in profit. How do you manage this trade now? First off, the way I will tell you the way I do it, there's no basic way. Everybody manages trades the way they do, the way they want. So the way I do it is I have a one-to-one like this. So you can see that my TP, the first take profit was triggered with this one black candle, this one bearish candle you see here. It got triggered with just that candle. So what I do personally is I move my stop loss to break even. So this is me managing the trade, managing my risk as well. Because if I'm risk free on this trade, you'll notice that I don't have these ties with this trade, meaning I've cut ties with the trade. I'm not too affected with what's going on again because I feel like I have taken some money off the table and I've also secured anything that I have left on that trade. Meaning if this market has to reverse all the way back to my entry, I'm not losing any money. So that's me practically managing the trade as it progresses. So now you can still manage the trade in another way like this. Now you're still on this position. And now let's say you were buying here. Let's say you were buying here because of maybe for some reason this was a key level and you're looking to buy here, just for an example. And you're expecting the market to go up. And instead you have the market dumping down like this. So in a situation like this, when you see that the market has broken this key level, this one is not really a perfect example. I want to look for something that really makes sense. Hmm. Okay, let's say something like this. Let's say, I hope you're seeing these candles clearly.
Yeah.
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 Okay. Okay, now we have a level like this. Let me zoom this in. We have a level like this one right here. Now we are looking at, since we had 1, 2 taps here, if it comes back here, I'm buying. So this is my position right here. And my stop loss is, let's just assume that our stop loss is way down there. That's not been triggered yet. And my TP is up right there. Now, if the price comes back and triggers it triggers it activates my order here and it starts moving. And I'm praying that it should get to 1-to-1 so I can break even and be safe. And that does not happen. It goes now and closes this large candle here. It closes this large candle bearish. You can see how big this bearish candle is. Now, I know that this candle has a very, very slight chance of reversing because my trading strategy is if this level breaks, I'm looking to sell. So now clearly this level has been breached. So now how will I manage myself out of this? I'll do two things. If this candle closes here, I'll definitely wait for a pullback into this area. So if I can get like a pullback, even just a little pullback, I'll close all of my positions like that. Or if it closes like this, I'll still close all of my positions here. And I'll get away with maybe, I would have taken more loss. So I closed everything here and just managed myself out with little or smaller loss than what I would have initially taken. So you can like, if you see a key level and you have huge candles like this forming down towards your stop loss, you can close out your positions to make sure that even if you're to take a loss, it's not going to be the initial amount that you were going to lose on that trade. But on winning positions now, you just trail stops. You just move your stops to break even, take partials, and that's it. There's not much about it. So that's trade management. Now, to answer your question for risk management is a plan. It's like a trading plan. because really it's not a set, it's just a set of rules that you follow to guide yourself when trading. Meaning you have I'm not risking more than 1% of my account. You have a $1,000 account, you have a $1,000 account, and you say you're not risking more than 1% of this account. You say that 1% of this account should be $10 or so. So now you're putting $10 on a trade. Every trade that you take, you're risking $10 on that trade. You're not risking more than $10. So if you're taking, no matter how good the setup is, it's $10. That's your risk management. You have $10 per trade, and you're aiming for $20 at the end of that trade because you're aiming for 1:2. So you're aiming for $20 and you're risking just $10. That's a parameter you've set. And you've set another one that if you have the first TP triggered, if your first take profit has been activated, meaning you've taken partials already, you're moving your stops to break even. So this is a risk management plan that you have. So you use that risk management plan to actively manage your trades. So they are literally the same things, just different instances. So that's it.
Okay, all right. Because sometimes if I'm on trade now, this has happened to me several times. My trade will be running
Yeah.
towards direction, so I'll be on profit, but I'll be waiting for it to get to my take profit. But sometimes, most of the times, I mean, it will reverse. I hit my stop loss. I will lose
Yeah.
everything.
Yeah. Okay. That is because you did not break even. So if you said you've been in profit, I can maybe assume that maybe you've already made like 1 to 1 of what you risk.
Yeah, more than that.
Yeah, more than that. That's to say your risk management plan is not intact. It's not your strategy. Your strategy is okay. So now the way you risk trades will also tell if you'll be profitable or not. You might have a winning strategy, but if you cannot manage your trades, you still not make money. So now you had the opportunity to take money off the market and you did not. You held back because you were looking for more. So this is more like a greed. I can put it like that. It's kind of greed because if you were on that position, then you happen to see that your trade has already moved 1 to 1, you break even. Then you be like, okay, whatever happens. If it's coming back to stop you out, if it's going to your TP, then that's it. That's just it. So the problem on that one, the problem you were facing there is trade risk management. You didn't manage the trade.
Yeah.
You have to always make sure that you take partials off the market because anything could happen. You take partials, you break even just to secure yourself, secure your capital, and that's it.
Yeah, it's just like GJ. I'm on GJ since think about 3 4 hours ago. You know,
Mhm.
It happens.
Okay, what did I miss?
Nothing. We were just talking about, taking profits so you don't lose everything. Just as I said, you have two ways. One is to
Yeah,
move your TP up or down as you make profits, or the other one, like you said, you take some of the profit out of the equation, so to speak, and you're guaranteed to at least make a portion of it, even if it
yeah.
goes south.
That's very important because you don't know what the markets will do. This this whole thing is about probability and prediction. So you don't know what next will happen. You just have to
Right.
make sure that at least your capital is safe because that's the goal of a business to make
Yeah.
profits. So once you secure your capital, you know that okay, you can live to fight another day.
Yeah, you live to fight another day.
Yeah.
That's absolutely correct. And we're going to do it. We're going to live for another day at least.
Yeah, that's important.
Uh,
yeah,
yeah, go ahead. Go ahead.
yeah. Sometimes I used to. I think what happened is because of the way I do work in social media. You see people on profit, but they don't tell you what was behind it. You will say, okay, let me wait and see if I can reach up to what you're seeing on the screen, what you're seeing on social media. But at the end of the day, you will lose out. if I put on trade now, like one to one to 1.5, 1 to 1.3. If I put a trade of up to 10, I will win at least 7. But because I'm seeing 1:2, 1:3, myself, I'm feeling that maybe I don't know what I'm doing. Because
Yeah.
of that, I'll say, okay, let me move to 1:2 or 1:3. At the end of the day, I will lose everything.
Okay. So you see you follow you see all these things on social media and you're trying to incorporate them with your trading as well.
Yeah, the keeps messing me up.
Yeah. Actually, most of these things on social media is unreal because traders do not make this kind of money. Like people just take you see somebody with $100 account and his equity is running like $80,000, $50,000. It's very unreal. Most of these brokers are not real brokers. They are just their stuff that they've made, and some of it is just demo that they've accidentally taken and they make this post online. So do not follow social media.
Yeah, it's true.
Okay, okay, that's true. That's true.
All these Lamborghini millionaires,
Nah,
fake.
it's all fake. These guys, they don't make money from trading. They make money from they have other sources. They don't make money from
Yeah,
trading.
yeah, yes.
Wow. Yeah,
Yeah, now
that's
that's
why
not the
you
way.
see, you see, if you go to like somebody's Instagram, you see him making posts about like trade his equity. He has like 50 trades open and they're like $10,000, like total of $400,000 running in equity. It's not real. Nobody trades like that.
Okay,
Yeah,
okay, okay.
and they
Nobody
all
trades.
trade from their
Yeah.